Morning, welcome to ANZ News. It's Wednesday, the 17th of February. Today we're talking the Great London Silver Squeeze. The last couple of weeks have been extraordinary for silver, starting with the Silver Squeeze hashtag movement, which saw unprecedented sales of both physical silver and silver ETF shares, and the accompanying massive spike of silver being delivered to the vaults backing these shares. It was also the biggest period of sales of our AGS Silver Standard token, which are silver-backed, on CoinSpot ever. If you somehow missed the Silver Squeeze action, we reported on it in the last few weeks in a few different stages. The volumes on the largest, or world's largest ETF, iShares SLV, alone are staggering. On the 28th of January, 152 million shares were traded, with each share representing 1 ounce of silver. On the 29th of January, it was 113 million. 1st of February, 280 million, and so on. Between the 29th of January and the 3rd of February, SLV alone added 109.83 million ounces of silver, or 3,416 tonne. To help visualize that, it was 113,501 good delivery silver bars, each weighing nominally 1,000 ounces, or nearly 30 kilos each. SLV vaults and all their silver through their custodian, none other than JP Morgan, and all of it stored at LBMA vaults in London. Such extreme demand has seen a tightening already of the relatively small and inelastic market of physical silver, with reports of 85% of all good deliverable silver in London having been used by SLV in just those few days. Given this supply squeeze, SLV has very quietly added the following to their prospectus on the 3rd of February this month. This from them: the demand for silver may temporarily exceed available supply. That is acceptable for delivery to the trust, which may adversely affect an investment in the shares. To that extent, the demand for silver exceeds the available supply at that time, authorised participants may not be able to readily acquire sufficient amounts of silver necessary for the creation of a basket. Baskets may be created only by authorised participants and are only issued in exchange for an amount of silver determined by the trustee that meets the specifications described below under description of the shares in the trust agreement, deposit of silver, issuance of baskets on each day that the NYSE ARCA is open for regular trading. Market speculation in silver could increase or could result in increased requests for the issuance of baskets. It is possible that authorised participants may be unable to acquire sufficient silver that is acceptable for delivery to the trust for the issuance of new baskets due to a limited then available supply coupled with a surge in demand for the shares. In such circumstances, the trust may suspend or restrict the issuance of baskets. Such occurrences may lead to further volatility in share price and deviations, which may be significant in the market price of the shares relative to the NAV. And we repeat, this is just one ETF. It becomes even more intriguing when we look at the weekly transparent holdings chart. You can see from the massive spike up, in this next chart we're going to show you, the far right of the blue bar, that illustrates the inflows talked of previously. However, 1 week on and directly to the right is a near record outflow, or red bar, of 226.9 million ounces in 1 week. Is that chart here. What simplistically you might understandably assume that this reflects the ETF withdrawing the silver as the price corrected and FOMO latecomers panicked and sold. However, the data shows that it was not silver being sold, but rather silver redemptions for physical metal. What this means is that the select few are actually allowed to, the so-called authorised participants, were converting their ETF shares for the physical metal at a great rate. Authorised participants are the very big end of town, the so-called bullion banks. That they are taking delivery of the physical silver must surely be sending a signal to the market and could well be related to that new disclosure in the SLV in their PDS. The other elephant in the room is whether or not that silver has also been leased out. This practice, called rehothification, means that there are in effect two claims for the same ounce of metal. Investopedia defines it as thus: rehothification is a practice where banks and brokers use, for their own purposes, assets that have been posted as collateral by their clients. Clients who permit rehypothecation on their collateral may be compensated either through a lower cost of borrowing or a rebate on fees. Derivatives ultimately are a paper promise. An ETF is a derivative. Wall Street are conditioned to be comfortable in that space, as it is pretty much all they can do trade. Again, that they're converting their derivatives into physical metal is telling. Ainsley gives you a number of non-derivative options to buy and hold silver and has ample stock in almost all lines with more on the way. You can buy bars and coins and hold them yourself or in your own safe at our independent reserve vault. You can also have an Ainsley allocated storage account where those same bars and coins you order are stored at reserve vault, but we manage it for you at a charge. Alternatively, you could also check out the Silver Standard or AGS tokens, which are fully allocated tokenized silver on the blockchain. The Silver Standard, as with the Gold Standard, is backed by real bullion, already vaulted, all serial numbers recorded and discoverable for all eternity, verified by global assurance firm PKF, fully insured, and with direct ownership by token holders. With Gold Silver Standard, custodian is simply that, the custodian of your silver. The legal terms explicitly prohibit any rehothification of that metal. The upside is you buy silver at rates only available for the biggest silver bars, free and secure storage without the logistics of all that heavy silver, and tradable 24/7 through CoinSpot, Australia's most popular exchange, at the click of a button. Nice push there today for silver. We hope you enjoyed that news. A little bit of transparency there between ETFs and derivatives as well, and the difference between real silver and, I guess, paper silver. Jump over to ainsley.bullion.com.au for all things physical, Ainsley Wealth, checking out cryptocurrency products, and goldsilverstandard.com for our tokenized gold and silver, backed by real silver and real gold and stored at reserve vault. We'll catch you tomorrow for more news.